What's up, guys? It's Cash Flow Cart. Today we have a very exciting video, and that is going to be how to see value and find undervaluation in dividend stocks. We're going to get right into it, guys. I haven't had too much going on today. I did get a burger from a random food truck that was pretty good. I don't know if you guys can see that. It was called like Bloom Burger. So anyway, other than that, I have not done too much today, but I want to film this video. It's been one I've been wanting to do for a little bit, and let's jump into it. Real fast, before we get going, I will do a quick trade update. I'm sure if you guys have been keeping up with the channel, you've probably seen I did trim Apple and Microsoft in order to reallocate those funds into my Hershey position. Hershey, just to refresh, my average price is $182 and change. It is up to $192, so I'm up $10 a share on 30 shares for roughly $300 open profit. So, 2 thumbs up. Again, I try not to get too caught up in short-term performance. However, I will say I don't ignore it, because I do feel like shorter term performance and moves can kind of be an indicator of how well you are finding undervaluation, how much bang for your buck you're getting. Let's look at Apple real fast and then Microsoft. So remember, I trimmed this one at not quite 215. I took off 13 shares. It's now at 217. So, it really hasn't done much in the weeks following that trade. We will look at Microsoft last before we get into this video. I trimmed 5 shares of it at 453, and Microsoft since that week has gone ahead and pulled back on 3 weekly candles in a row, and Microsoft is now at 418. Again, 2 thumbs up. I guess I'm happy with that exit in Microsoft. I'm happy with the entry in Hershey. Apple hasn't done a lot, but, I don't want to get too caught up in this stuff. However, it is definitely important to kind of keep up with the immediate follow-through of your trades, guys. Okay, jumping right into it. Like I said, today we are going to talk about how to see undervaluation in dividend stocks. Essentially, how to identify, okay, here's an undervalued stock. I'm ready to start building a position in it. We're going to be going over 3 methods. None of them should kind of be used by themselves, and certainly it should not be the only thing you focus on as an investor, but, it's kind of a good place to find out, okay, do I want to start building this position? Let's get into it, guys. A preliminary step, and I put this in my notes for the video, I'd say a preliminary step in this process is kind of keeping a watch list. It doesn't have to be like a physical watch list, or it can be something you just type on your phone or anything of that nature. But I found it really helpful to kind of keep a watch list of stocks that I would maybe potentially be interested at some point, and then every couple months I can kind of revisit that watch list and see, okay, why did I put this on here? Is it more attractive now? You can see I had Hershey on the watch list, and I did recently add that one. So yeah, I would say a preliminary step would be to keep a watch list, and then let's get into it. Step 1 in identifying undervaluation, guys, is going to be technical patterns, typically meaning chart patterns. And I know as dividend investors, some of us tend to shy away from using technicals, using charts, using technical analysis, anything like that. It might be a little bit taboo, but I will encourage you not to shy away from that, because I think, at a glance, I think if you get comfortable kind of reading charts and reading price action, I think it's a good way to quickly identify, okay, maybe there's an opportunity here, and maybe then I can dig more into the fundamental metrics and take it from there. So my advice would be to kind of use charts in conjunction with other valuation metrics. Let's talk about a few things to look for on charts, kind of when you are going through your watch list. First off, and in order to support these examples, I've kind of gone back through stocks I've had for a little while, or I maybe didn't build out a full position in. But first off, something you can easily identify from charts is large pullbacks, okay? And you're going to want to try to find large pullbacks that don't necessarily, reflect underlying issues, okay? So obviously, let's look at something like Boeing. Let me back up. Boeing had some issues. They had a plane crash or something. I can't really remember exactly what the case was, but Boeing had some issues, and it led to a large, steep pullback in share price. I don't necessarily mean something, this dramatic. I more mean something that could be brought on by some news, but it seems like the chart is overreacting. Okay, so we'll go to Coke, and you can see I've kind of used this trigger a few times. More recently in the portfolio, guys, I had Coke added. I talked about last year this pullback in kind of the consumer staples sector brought on by Ozempic and weight loss drugs. And I noticed Coke, sold off pretty aggressively for like 8 weeks in a row. I felt that this pullback I could see in the chart didn't necessarily reflect real underlying issues in, Coca-Cola as a company. So I did go ahead and build out kind of a small position in this one. This isn't a perfect example, but I think it does demonstrate it. I was a little late to this dip, and I ended up taking off, the 7 shares I had put on for a profit. Not a perfect example, but I certainly made money, and I think you guys can see, large pullbacks that are not reflective of, large issues, if that makes sense. Next up, guys, like I said, I went through positions I used to hold, so maybe I'll be speaking with a little remorse in my tone while I film this. And the next thing I would look for in technical patterns is going to be a break of trend. Okay, so Caterpillar, I'm sure in the dividend community, you guys are familiar with this one. It's been kind of a beast in terms of that compound annual growth rate of the dividend. I was fortunate enough to have 3 shares in this one, and I was dumb enough to not hold these shares for the long term, and probably even worse, not build this into a bigger position. But, it's easy to look back and say that now. So, break of trend. So, you can see here, Caterpillar in the years, it's hard to read these years sometimes. Let's see, 2020. In 2018 through 2020, Caterpillar was in kind of a pretty consistent downtrend or a downward channel, whatever you guys want to call it. And then in 2020, what do we see? A break of trend. I have it even circled here. So even though this was a long time ago, I was still on my game. So we see this yellow line is going to demonstrate that downtrend in Caterpillar. Once it does break that trend here where I have circled, maybe that's a sign, okay, I want to examine this one in more detail. It could be time to kind of build out this position. And I think I did that. I'm not sure why. I have 3 shares sold, and I'm not sure why it doesn't have 3 shares bought somewhere in this area. That would probably make this a little easier to understand. But you can see, Caterpillar broke trend. I was able to pick up 3 shares, not a very big position. And then, unfortunately, I did take those shares off. Again, not a perfect example, but definitely a money-making example, guys. Moving on, we're going to do any consolidation or technical reversal type of pattern. And I put consolidation. You guys probably hear me throw the term consolidation around a lot on this channel. And I think the reason why I'm always talking about consolidation is a lot of the stocks we're buying, a lot of dividend stocks with established track records, they might be slower movers and they might have a beta, below 1. Okay? So oftentimes they're not going to be as volatile as some of these other, more hyped up names like Tesla, Nvidia right now. I mean, we haven't seen Nvidia really like consolidate for months at a time. It's been up, straight up, pullback. There hasn't been a lot of pausing to think per se. So this last thing we want to look for is any consolidation or reversal pattern. I probably could use a better example right now, but sometimes I get tired of throwing the same examples at you guys. So we're going to go ahead and use AbbVie. And so similarly to Caterpillar, AbbVie was in a downtrend, and then we saw kind of a double bottom right here. Essentially what a double bottom is when price action kind of hits one level, gets a little bit of a reversal, and then comes back and kind of refuses to break down that same level. So it's a double bottom. Okay, it's pretty intuitive, but oftentimes a double bottom can be a sign of a reversal pattern. Again, guys, I'm not getting on here to preach, technical trading, technical analysis, but I do want to say it's going to be a great asset to have kind of in your toolkit as a dividend investor if you can read charts and you can quickly identify, okay, maybe there is something happening here. One more thing I'll clear up with the charts before we move on to the fundamental metrics is this, guys. As a long-term investor, the chart I typically use is weekly candles. So, I've got up in my favorites here, max price action weekly. It's easiest for me to identify, what's really happening on kind of a long-term time frame using weekly candles. I don't want you guys to get too carried away maybe looking at the daily or 4-hour charts, because as dividend investors, these are going to be long-term positions we're holding, maybe even forever positions we're holding. So don't get too, small-minded because you're on too short of a time frame. I have seen someone I used to work with used monthly candles a lot. I really am not into using monthly candles because I feel like unless it's a super long established company, there's just not going to be much of a story there with monthly candles. So I stick with weekly, and I've noticed that helps me kind of capture, the best opportunities without having too much noise that the shorter term time frames tend to bring. All right, guys, that was enough yapping about charts. We're going to visit 2 other quick valuation metrics that are going to help you identify undervaluation. I've spoken on this stuff before, but I mean, the point of this channel is for me to document my journey as an investor, for me to be very transparent, and if you guys agree with this, disagree with this, that's not so much the point. The point is if I can offer you, something that resonates with you that's going to help you be a better investor, or likewise, you could help me become a better investor. This is kind of a documentation channel. All right, price to free cash flow on a forward basis, guys. We've done this before, and there's a ton of valuation metrics. My favorite one as a dividend investor is going to be price to free cash flow. The reason why I do that is because free cash flow is a very non-deceptive metric. It's very hard for companies to kind of, use any sort of accounting tricks on free cash flow. you can't really do anything to, alter the story that this number tells. I also like free cash flow because that is the number that has to be supportive and sustaining of the dividend, the company is paying out. So I use, price divided by free cash flow. I've got Hershey pulled up as an example. I hope you guys are not tired of hearing about Hershey, but this is, I feel this is kind of a big teaching moment, so we're going to keep talking about Hershey one more time. So currently, their price to free cash flow is 14.18. Okay, here's kind of where I guess the experience is going to come in, guys. I would not compare that to the sector median, okay? And I wouldn't go to some screener and screen for like low price to free cash flow companies, just because when you're looking at individual stocks, you're trying to find quality stocks. You're going to have to pay kind of the premium that these stocks demand historically. Okay, so while if I compare Hershey's price to free cash flow to the sector median, it would say, okay, Hershey's overvalued by 23%. That's not what I'm going to do. Okay, I'm going to go ahead and disregard kind of any sort of comparison to the sector. Rather, I'm comparing Hershey to, okay, how has it traded? How has it traded in 5 years? What has the 5-year average of this metric been? Really great. Seeking Alpha will say here, Hershey 5-year average. And that 5-year average of Hershey has been 24.37. We can see just based off that metric, Hershey is 42% undervalued right now. Okay, very important, and I will urge you guys to get in this habit of when you're using valuation metrics, it's going to be much more effective to compare a company's current to kind of its historical rather than just say, oh, what's a low PE for an S&P 500 company? That's really not going to help you. In my opinion, I think as investors, we need to get away from that school of thinking, and we need to get into, okay, I want to own this company. Here's the lens I'm taking. Here's where I can be opportunistic. Okay, does that make sense? And I do appreciate that, Seeking Alpha offers the 5-year average, because I feel like, looking at data is great, plus 5 years, whatever. But if I'm looking just at entries, I definitely want to have like what is a great entry for the past 5 years. Okay, I don't need like what's the best entry for the past 20 years, because I'm not sure those type of levels are always going to come around again per se. So I do like that 5-year average. And guys, last but not least, we can actually do kind of a similar thing here with a company's dividend yield. Okay, so Hershey's dividend yield right now is 2.67%. Again, the sector median is 2.83%. That means nothing, okay? Pretty much, in my opinion, in most cases, you're going to ignore the sector medians of stuff. So Hershey's 2.67% dividend yield, and we can see that 5-year average is 1.98%. So right now, today, we can get more bang for our buck is how I like to think about it. With Hershey, we can get 35% more bang for our buck right now compared to the past 5-year trailing average. Okay, so that would be another sign of undervaluation. And if using dividend yield as kind of a valuation metric, if that resonates with you, I would say definitely pursue that. Definitely get in the habit and practice of using that. But again, I just wanted to bring these to you guys today, and hopefully one of these 3 tips I've gone through, I went through some chart patterns, I went through price to free cash flow, and I went through dividend yield. Hopefully something resonated with you guys. Again, I'm Cashflow Cart. I drop videos every Monday night at 6 p.m. Eastern. And if you are not subscribed, feel free to hit that button. I guess maybe turn on the bell, the post notifications. I have to get better at like saying stuff that YouTubers are supposed to say. I also have an Instagram, so if you want to follow me on Instagram, you can. I post like when my videos come out. I don't post that much on Instagram really, but anyway, I'll see you guys next Monday.